Welcome to the Real Estate Show on KMED. November the 7th is our date. Pete Belcaster and Joe Brett, the real estate guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. And, 5.5 years, we haven't run out of them yet, which is a good thing.
Great thing.
Yeah, it's a great thing. And we're not going to run out of them either.
I don't see anything on the horizon that would stop that from happening either.
Well, welcome to the show today. Interest rates. So we haven't talked about them for a while. And
that's because they haven't done a whole lot.
Well, everybody
really
keeps saying, everybody's
for everybody.
Go up and everything. But Guy Giles from Ditech Mortgage is in the house today with us, and always glad to see Guy. How are you today? What's been going on with you?
Oh, nothing. Just been busy. I've been probably working, 15 hours a day the last week or so. It's crazy. I've been blessed.
What are you doing? I mean, these are loans? Are you getting loans in here? You're that busy?
Yeah.
Ditech does, Pete.
Well,
it's been kind of weird. It's been kind of a word of mouth thing. I'm closing loans, and people are just kind of hearing about the rates and the fees that we're given that are just killing everybody around. So I am busy.
Well,
that's
nice.
Well,
that's good to hear.
Speaks well for
it shows that the market is continuing. That supply and demand thing is out there, and
we asked Guy back in the spring to keep interest rates down and just keep that kind of roll going, and he's done a great job of it.
Well, as long as interest rates stay this way, this robust real estate market is going to continue. There's certainly no doubt about that. Also in the house is Dave Heidinger, who's a certified residential appraiser from Cunningham and Associates. And so Dave's been doing this a while. Nice to have you to the Real Estate Show, Dave.
Oh, thanks for having me here.
You know Joe, actually, don't you, from back in the day?
Yeah, many moons ago, we were next door neighbors.
Door neighbors.
And the Heidegers were a great neighbor and a great family next door, and knew their sons really well, and great athletes, and just they went through Cascade Christian and were big parts of some great successes there.
And doing well in there. Now they're old. They're older, so they're doing well. Well, good for you and good for them. Nice to have you with us. Tell us about it. The appraisal world. It's always interesting, isn't it, how all this works together, because you can't do one without the other. You can't close the deal without the lender, and you can't close it without an appraisal of the property. But those appraisals, a lot of times, Dave, can mess things up or don't come in that people want. And that's what you've experienced that.
Mm-hmm. We can be the person they love or the person they hate.
Yeah.
So, got to have thick skin.
Yeah. Well, just tell people what changed from before the Great Recession, okay, and how things were done in appraising versus how it's done today. Because I think a lot of people don't realize that I just don't call you up and say, would you go appraise a house that we want to buy?
Yeah. Back in 04, 05, before everything happened. The loan officers would actually be our clients. They would call us up, hire us to do an appraisal. We would send the appraisal to them, then they would submit it to the lender of their choice.
The loan officer. So someone like Guy would do that? Wow. Okay.
And that's all changed because of federal regulation, and so now there's barriers and separation and those kind of things.
All right. And so now how do you get to a house? Because I don't know where you're going to go.
I drive usually.
Well, but I'm not going to get you to come to my house and say, I want you to come and appraise my property.
Well, if I can do private appraisals for anyone, but if for a loan through a lender, either the bank has a department that hires me, or they use what's called an appraisal management company, which is basically a third party that hires us. And so, like Guy being a loan officer, me and him wouldn't have direct connection on an appraisal. Mm-hmm. It goes through all these channels and finally gets back to him and his loan.
Do you think that you've been doing this a while? Do you like the way it's done now? Do you like the current system?
Yeah, I think that the separation is good. As far as there used to be a lot more pressure from maybe undue pressure. And you just had to, as an appraiser, you had to just have your integrity and appraise the property as you see that it should be appraised. But if an unscrupulous person might put pressure for you to come into a value, and now they've really changed that where there's separation and we don't have that pressure. Now there is some negative sides to that where there's a lot more government control and regulation and hoops to jump through and that kind of thing.
But overall, probably you're good with it.
Bottom line, you're protecting the person who's loaning the money and who the property may come back to if something goes wrong with that loan or they can't satisfy or meet their obligations for that. And at that time, they've got to get that property back at the right appraised value for it to be a manageable asset for them.
That's the thing that a lot of times borrowers don't understand is that they're actually paying for the appraisal, but they're not our client. The bank is the client, and so we're not even allowed to give a copy of the appraisal to the borrower. The bank has to give them a copy, but it has to come through them. We could actually get in trouble if we did. And so, there's a lot of things in place, but I think they've worked out some of the problems, and they're actually underwriting now. Back in the days, you asked about the differences. Back in, things went through very easily. They checked if you had a pulse, and you say you make $1 million, and that looks like a good appraisal, send it on through. Yeah. It's not that way anymore,
and that's good because
good.
Even though we're having a healthy market, we're not having that. It's not being driven by kind of false loans, false everything, is it? It's just being the legit stuff.
That's the other. Well, just real quick, that's the other piece to this is. Even though we're kind of the client as far as that goes and the appraisal comes back to us, it really is making the whole market stronger this way because we know that we're having good appraisals, that they don't really have a dog in the fight. I mean, I've known Dave forever, and he's always done really good appraisals, but there was a time and a place where there was just a lot of pressure on these guys to come in at a certain value, and I noticed that even on my own house. And you didn't do the appraisal, by the way, but it just miraculously came in back in the day exactly what I needed it to get the job done that I had to. And I was a little bit suspect of it, and I wasn't even in the business at that point. But it's just making the whole market stronger. I mean, it makes it stronger so investors know that there's not anybody manipulating the values of the houses at this point, so they're more apt to invest in mortgage-backed securities that are giving us lower rates and keeping them low. So the fact that we're doing better loans, and again, the collateral is there, so we just know that they're not artificially inflated. So it's making the whole thing stronger.
It's a better process.
Yeah.
And remember, I think the county assessor told us this last year, or based on, on January 1st, 2015, so it was still a while ago, 10 months ago, that the valuation across the county was up 7%. Remember, Joe, over that time period. Which is okay. It's not a double-digit increase, so it seems
25% the year before. So.
Well, in some places, but generally it hasn't been that way. So, do you guys think that that's a good thing? Valuations, I mean, that's a good thing.
That they're going up more gradually.
Yeah.
Yeah. I mean, I refer back to 10 years ago as the crazy days. And where values were just skyrocketing, and it couldn't have continued indefinitely.
No, and that's what concerned us here, whether it was going to go back again to these double-digit increases, and then the whole floor would fall out.
It's really interesting for what Dave and Dawn sold their house for in the mid-2000s. It's right about, and then it went, the prices inflated, and then they went off the cliff. I mean, it went way under value for the 2011, 2012, and into 2013, and then has now...
They're kind of back where they were.
Adjusted back. Right about back to where it was then, or might have been with a little steady growth. We've recovered pretty nicely, and we've almost fallen back into a more normal, sustainable real estate pattern.
I think one of the things I've noticed about that is that there's things in place that Guy was talking about through the system that have checks and balances, but there's also, I noticed in the borrowers, more conservative, just wisdom. People are not...
They're
willing
smarter.
to go out there as far. They're just a lot more careful. I guess there's been a lot of pain in the past decade.
And they're more willing just to take a more manageable loan that's within their limits.
And that may be keeping values from skyrocketing, keeping them increasing at just a normal level.
Well, it is, because we're not just loaning on 15 different investment properties for somebody doing what's called a stated loan, where you could just kind of walk in and tell us what you made for a living, and then people were buying up a whole bunch of properties that they really couldn't afford at the time. So I think that is kind of helping things go up a little bit more gradual. Hopefully we won't see a run up like we did. I think we'll still have pretty good appreciation over the next 5-10 years around here. There's no doubt about that. Yeah.
Well,
but it's healthy now.
All right. So, what would you rather put your money in real estate or in that stock market right now? It comes back to that, doesn't it? That slow, steady growth of real estate is much a better investment. Okay, the stats are out here, from the Southern Oregon Multiple Listing Service and the York Valley Association of Realtors. And in that 3-month activity period, which ended, so it was August, September, and October of this year, sales in Jackson County, Joe, 718 transactions in the 3-month period. That's up from 586.
Yep.
The median price in 2010, Dave, you said this in 2010 was 165,000. Today it's 220. That's 33% increase in 5 years. Things like that. New homes sold, 67 of them in a 3-month period.
Wow.
We started our show, they were zero. I mean, zero. And now,
how many sold in that 3-month period last year?
65. So that's been pretty steady. The median prices are they're higher.
They've gone up for new
almost
homes,
294,000. Rural properties, again, almost similar sales, but the values are going up. That's what we're seeing. 45% of rural properties and things like that. The good news is that the distressed properties continue to make up a very small part of the market. 10%, 9%, which is a lot better than 70%. Than it was 5 years ago too.
And a lot of that is just the bank inventory just making its way through the process, and more of those are REOs, far more than short sales even.
A lot has changed. Back to Guy Giles, Ditech Mortgage. Tell us what are rates going? The ranges that you're telling your clients this last week that you've been working with, and what types of loans are they seeking from you? Because that's always really a key to me. Is what are people looking at? What are they asking you for?
Well, we've seen a pretty big shift from the USDA into more like FHA type loans, just because the income limits on a USDA loan are in place, and now the housing prices are kind of getting to the point where it's getting more and more difficult to find a house that you can qualify for, but still, not make too much money. But I don't know. It's just kind of a weird.
USDA loan, of course, is a 0% down for rural, people living in rural areas. What is the income limit for that?
It's like around $72,000 for a family of 4. It goes up over $90,000 if you've got another person in the family. But there's a whole bunch of weird little nuances within that. If there's an outbuilding, the appraiser will take that right off the appraised value. So you have to be careful that most of the value's in the house. So it's kind of a rural property that can't be too rural or in nature. But I don't know. There's just a ton of things that go into.
Well, I haven't had a lot of people ask about them and talk about them recently either. So you're right. You're right about that part. And of course, USDA raised to 2%, the loan to pay for the program. So that's adding. Now it was 1%. It doubled that. So that's adding more cost to the loan as well. So maybe that's shying some people away as well. Okay, what else is out there?
Well, there's still a lot of conventional loans. I priced somebody out right before I left here, and the guy had great credit, and so a high 3% to a really low 4%, depending on and that's at my bank. I don't really shop around with the other guys a ton. We're generally a 1/4 to 0.5%, depending on the program. But that's just a real general rule. A little bit better than folks. Mid 3s right now for a government type loan. That would be your FHA or USDA or VA loans.
Okay.
So they're still low. Last Wednesday, the Fed started kind of coming out saying we might raise rates in December.
Here we go. Yeah, I know.
And it happens every month. And then they hope for really good, they just kind of hope for really good news. And, realistically, with all of the people kind of moving in over in Europe, I don't see that those economies can really sustain all of the immigrants or whatever you want to call it going in. So I do see a little pullback coming. It hasn't happened right now, but everybody's kind of focused on. They guaranteed kind of that they'd raise the rates before the end of the year, and they have one more month to do it. I think on the 16th of next month they'll meet again, and they could do it just so they have a bullet in their gun, because they really don't right now.
In conventional loans that you're doing now, what generally is the down payment that is requiring on those?
Well, technically, you can do a 3% down on a conventional loan, but it's a crappy program. We all waited for it. We couldn't wait for it to get here, and it's a first-time homebuyers program that really didn't turn out to be at least what I thought it was going to be. 5% is kind of a minimum. Ideally, if you can have 20%, then you can avoid that mortgage insurance. So it's good to do if you can.
So even on a conventional, if you 5% down, you've got to have mortgage insurance on the property.
Mm-hmm. Now, and then again, that goes a little bit deeper with you can do lender paid mortgage insurance, and that's the conversation we could have at that point.
Well, I think it's important that folks know that. So conventional loans seem to be kind of overtaking FHA loans. Is that right?
Yeah. Yeah.
See how weird that
Well,
is.
your mortgage insurance
What?
doesn't go away on FHA loans anymore. So
Well, and it's just, it kind of goes back to what you said a minute ago about, or Dave said about buyers being more educated these days and not wanting to get over their head. It's not just about that payment. It's like, my gosh, I'm going to have mortgage insurance for the rest of my life as long as I'm in this loan. So if they can, maybe get a gift or do something to come up with that little bit to have 5% instead of 3.5%, sometimes it's kind of attractive.
Well, and speaking of that, the Congress is debating. The National Association of Realtors is just up in arms, sending out all these notices regarding Congress wants to pay for the transportation package on the backs of homeowners by charging, increasing the fees that Freddie Mac and Fannie Mae pay. Well, that comes from consumers. That's kind of crazy, but that's what's going on.
Is it okay if I just bite my tongue?
I do that all the time, isn't it? With the Real Estate Show here on KMD, we're with Guy Giles and Dave Heidegger. We're talking about mortgage rates, appraising, and all sorts of things like that, and we're coming right back right after this. The Real Estate Show continues here on KMED, November the 7th of 2015. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. Don't forget, we have a TV show coming up on Tuesday, November the 10th at 6 o'clock on Charter Cable Channel 180 and Ashland HomeNet Channel 9. It'll be a Market Watch show. We'll update you on some of these stats, and we're going to talk about maintenance on your home.
Oh, boy.
A very
timely,
appropriate topic.
I'll just bring a list of things, and we'll go over them.
I remember Will Waite was here a few weeks ago from Elite Maintenance, and he's been out to my house. So I'm getting those things done. I'm going to get them done. I told you that.
I hooked him up with Stephen, our client who's got the listing in Sandoz Street in Twin Creeks, because he wanted to get that front door refinished, and Will was right on it.
All sorts of things you can do. Anyway, welcome to the show today. We're not here next week. It's the KMED Radio Auction. We're back 2 weeks from today with the John L. Scott Market Watch show. So today, though, interest rates, you have to have them unless you got a lot of cash, and some people do, but you and I don't. So we have to have a loan, right? Got to have a loan, and who better to do that, than through Ditech Mortgage and Guy Giles. So, and Dave Heidegger is here, also a certified residential appraiser, talking about appraising in properties. And the question for Dave is, in a market like this that's always fluctuating, and there's a lot of cash sales. Don't cash sales really screw up the appraisal process a lot? At least that's what I've always been told.
No, actually, no? I don't agree with that. I think as long as you have a well-informed buyer and a well-informed seller, I would think that a cash sale, it makes things happen a little faster and better, and the seller likes that. But with the way loans are anymore, we don't see that they necessarily bring the price way down.
All right. Now we see all the fluctuations in value, right? And look in your property tax statement, how those have gone down, right?
Look at the last 10 years.
Okay. Yeah. So in a market like this, how do you keep up with it? Because everything's changing so fast that a lot of times, I've had them, appraisals did not meet the price. And, I love the thing is, talk to the appraiser. I've never known an appraiser ever to change an appraisal. Have you? Have you done that?
Actually, yes.
Yeah.
There actually is a process that you can challenge an appraisal.
Yeah.
It's called a reconsideration of value, and it doesn't happen a lot, but if there's a legitimate mistake that was made on the appraisal, or maybe a comparable sale that was better that was overlooked, and, I have an open mind, and so, it has to go through a process, but I have actually changed an appraisal based on some information that was submitted to me that maybe I didn't know about a property that I used in an appraisal.
And how far back would you tell people or listeners that you go back, or they should go back? Because people do their own, they do their own comps, right? You can go back and comp. How far how far do you go back, or how far should people go back before the appraisal? That doesn't matter anymore.
Right, because appraisal has a pretty short shelf life.
Right,
right. They spoil.
Yeah, that's a good way to describe it.
We go back. We try to use comparable sales within 6 months of the one we're working on, the subject, but we'll go back to a year. That's pretty accepted in the mortgage industry.
Okay.
And if, let's say I'm doing a mansion, $1 million property, sure, we could go back even further if we had to. The philosophy is that you go back further in time and you go out further in distance if there aren't any comps.
Okay.
Because you have to come up with some way to value
some sort of comp to compare it to.
Right. The more dissimilar the properties that you compare it to, the harder the appraisal gets, because then you have to make a lot of adjustments.
Mm-hmm.
And the adjustments we're not supposed to just go in the back room and throw a thing at a dartboard and come up with an adjustment. We're actually supposed to justify how we make those adjustments. So the more complex an appraisal is, would be if let's say we have a property that's a geodesic dome or something that's
a log
a
home,
lot of
times.
acreage or a log.
Yeah.
They just, if you can't find 6 comparable sales that are just like that, then you have to use what's out there and use market-driven adjustments to come to a value.
Is commercial appraising? You don't do commercial appraising.
Yeah, I'm not a commercial
You're a commercial appraiser. That's a different world that they look at. But again, it all comes back to comps. So people should not go back basically over a year if you're looking at something. It's not going to help you.
Right.
Yeah. Okay.
I'll have people that say, "Well, my neighbor's house sold recently."
Yeah. Well,
how long
2
ago?
years ago.
2 years ago. Irrelevant.
It's irrelevant.
Think of the real estate pockets within our local market, East Medford, Ashland, and the different influences. Now we've got properties 250,000 and above that are moving, and they've got some activity that they had not seen for a few years before that. I've got to imagine that really puts a skew on things. And how do you keep up with that and those trends that happen seemingly over a few months? Sometimes we see some pretty interesting spikes or trends that way.
Well, and I think that's what keeps us employed is the fact that, you can't just say that what are property values doing in Jackson County? Well, there's some statistics, but if I'm appraising let's say a manufactured home or a entry-level house in West Medford, I need to know what that little market is doing. And so we have to do research on every appraisal based on the type of property that we're doing. So if I'm doing a manufactured home on acreage, I'm going to do my research on manufactured homes on acreage. And so I'll say if that market's increasing, that particular little niche market is increasing or not.
Where's the hardest places you have to appraise at? Would you say in the area?
Butte Falls.
Butte Falls. Okay.
I'm always sick, when they ask me to do one of those. I'm busy that day.
It's going to be a long march.
Okay. Besides there,
anywhere that there isn't comparable sales, these real small little Prospect or Butte Falls are difficult. Ashland is it's a challenge just because the houses there are so eclectic. That there isn't, every house is different, and you have a lot of older houses that are just totally rebuilt down to the studs, and so it's a challenge in Ashland. But
go ahead.
Do you like numbers?
Do I like numbers?
Crunch numbers? Appraisers have got to swim in numbers.
Well,
you'd have to like them.
I don't love calculators,
But you spend a lot of time with them.
Yeah.
Guy, go ahead, Guy. When would you order an appraisal from? I mean, you're the lender now, so I come to you in trying to get this, done. We're working with the same client. Obviously, we're getting in a loan from you.
Yeah.
When do you order the appraisal, and how should we expect that?
At this point, normally companies will charge you $500 up front. On all of our purchases right now, we are not charging that appraisal fee. We're just ordering them on the first day, and we'll charge it at closing. Just because appraisers are buried.
And are appraisals coming in for you, or what's going on in your particular world because you get the results back immediately?
I haven't had a ton of trouble with them. Every now and then on a refinance, you'll get one, and that's a little bit low. But I probably haven't had 3 low appraisals this year as far as that goes. I mean, I think realtors do a really good job, and I think that's what we'll probably talk about on the next segment a little bit as far as having a good person like you two as a real estate agent. And as long as you do that job good up front, we're in pretty good shape because, like you said, you've already kind of done your comps. I'll probably get in trouble with Dave, and he'll never talk to me after this. But I always encourage real estate agents to, if they're showing up at that appraisal to open that house or do whatever, bring your comps. Have a little talk with the appraiser and say, look, this is how I came up with the value. And at the end of the day, they're going to appraise it on what it's really worth, and your comps might be, way out there, and that's happened every now and then. But for the most part, they're not infallible like all of us, and I think they'd welcome a little bit of input.
You have to temper sellers a little bit right now in this seller's market too, because they're really anxious for a top dollar, and it's like, but are you going to appraise?
Think it's worth a lot more than it is.
Are you going to appraise for that top dollar? And if not, who's going to make up that difference? So it really helps for us to put a good price point on it. You're right, a realistic price point.
That's for sure. And that's one thing I've seen with a couple of deals where you get into a little bit of a bidding war in this environment because there's so much competition for one house. And I did have one not appraised at that point, and I didn't realize, until I saw it and looked at the listing, that they'd bid $140,000 house up by $18,000, and then there's no way it's going to appraise.
Right. And sometimes when you have that situation where there's a shortage and there's a bidding war, multiple offers, it can happen that things might lag behind because we're looking at past history. Hopefully it's only a few months past, but it's still, if it's rapidly increasing, we're going to always be looking back.
Yeah. And if the appraisal doesn't come in, Joe, people have options. You can bring more money to the table, or the seller can come down to meet those appraisals. Those are the two options it looks that you have when you get to that situation. Boy, lots to think about here on the Real Estate Show about appraising and mortgage interest rates and all that. One more segment to go. We're with Guy Giles from Ditech Mortgage and Dave Heidinger, who is a residential appraiser on the Real Estate Show from Cunningham and Associates. And we're coming right back here on KMED, right after this. Real Estate Show rolls on KMED, November the 7th of 2015. Pete Belcaster and Joe Brett, the real estate guys, with you. Don't forget, we've got a TV show coming up on Tuesday, November the 10th, 6 o'clock on Charter Cable Channel as well. Next week, KMED auction here. We're out of here. We'll buy something. It's almost the holiday season for that, isn't it? Anyway.
It's very much a holiday season.
And they go nutty around this place around the auction time. This place is a zoo, I want to
That's
want
why
to be
we
here.
like to stay away.
I could say I don't want to be here. We're back 2 weeks from today, and we'll do a John L. Scott Market Watch show. Just more of those stats that kind of get you into the mood here. We're talking today with Guy Giles from Ditech Mortgage and Dave Heidinger, a residential appraiser in the Rogue Valley here. Those stats at pending sales, all right? Right now, you know what they are? From a year ago, they're up 26%. Pending sales, Joe. That's good. New listings, guess what? They're up, actually, a little bit from a year ago, 15%, to 269 new listings out there in the last month.
That's
average days on the market. Jackson County, 35 days. That's. Remember, John L. Scott's got that thing of, their goal is to have, I think it was 90% of all sales within 30 days.
30 days.
It's really interesting in contract within 30 days. So the overall is at 35, and that's an increase. The original price versus the sale price. That thing there. What do you get? We say I want it for about $300,000 and you sell it for $280,000. That kind of thing. It's 96.2%. That's very healthy. That's showing it's a seller's market because the sellers are getting most of their asking price.
I'm glad to see that new inventory in the last month because you remember you charted the John L. Scott board where sales were far outweighing new listings.
But the inventory is not keeping up with the sales, and so it continues to go down because the available homes per buyer, and again, it's about 6-month inventory is a healthy market. We're at 4 homes available. Down 29%, but the month supply of inventory is down 40% from a year ago to 2.6 months. So you see, that's why the prices are up. That's why appraisers, Dave, have their work cut out for them because how do you deal with this kind of a market like that?
We're busy.
You're busy. and so I was going to ask you, are you seeing in your business, are you busy right now? Have you been that way for some time, or tell us about that?
Yeah, we've since probably almost about 10 months ago. It's just been crazy busy. And lenders want appraisals back within a week, but that's not a reality for any appraisers I know right now. Minimum is 2 weeks.
Wow.
Think of our sales up from the 3-month period from a year ago, significantly up these last 2 reporting periods. So that just means much more business for you all to keep up with. Yeah,
you keep expecting that it's going to just die down a little bit. We're heading into November, but it doesn't seem to be.
So So here we are, November, December, usually the slower months. You're still pretty busy at this point. Well, this market, Joe, may just continue right through the winter as it is right now because it doesn't look like it's slowing down much at all. Guy Giles, where are the people coming from who you're making these loans for? Are they local folks generally, or tell us a little bit about that?
There's a few local folks. I have mostly California. It's always going to be that.
California.
No matter what. But there's different people from different areas that are.
We welcome California.
I mean, we got nothing problem
Not
with
so
that.
much in Portland, but just don't save your gas and time and trouble. Just stop here.
Just
Land
don't
here.
vote in the stupid stuff you left down there.
Well, they're leaving. I mean, they're obviously migrating out of there. These people like my age who are retiring, kind of thing. Is that what you're seeing?
It was funny. I had a guy call today from Southern California, and his folks live in Grants Pass, and he said that he was going to buy a retirement home. And I said, well, that fits in kind of as a second home. And I said, when are you retiring? I said, you sound pretty young. He said, in about 30 years. But he wants to make sure he gets in the game right now.
Yeah.
So I think it's on people's mind, whether it's this month or like 2 or 3 years from now. We're doing a lot of purchases for people buying second homes that are going to retire in the next year or two.
Well, I didn't believe when Lennox Scott, who's the owner of John L. Scott, the grandson, and he said that he thought this was going to continue, for years because of the pressure from China, the Californians moving, the baby boomers, that this market was going to continue this way with little bumps, but it was going to continue for some time. And so far, he's been spot on with that. I have to say, he is not. That's what's happening. Yep. So. How long it goes or what it does, but right now that's really good. And the key box, the key boxes that agents open, for the month, over 8,100 of them.
Wow.
And that's up. So there's a lot of activity. There's a lot of properties being searched right now. So, it's a good time to, it's not a bad time to do this.
Guy with the good call on the don't vote in that stuff. He did down there. I think that's why they're coming. It's because they realize the error of their ways down
and
there.
that when the market was really hot 10 years ago, it was a lot of influx from people out of the area. And then when the market went south, that just stopped.
Yeah.
And now we're seeing it again.
Well, there was
that's
migration
critical to
out.
our real estate market is that pipeline.
Well, we'll see what happens. The economy seems to be, unemployment is down here. Our big issue is really housing. In Jackson County. Rental housing is still less than 2%. Dave Wright was here last week. We're going to hear from Danielle Roberts in a couple of weeks about the same thing. It's still not improving. And we see Bend, approving 1,500 new apartment units recently because the same situation. And remember, Medford and Bend had the same experience during the recession. Look how Bend is doing this. They're adding apartments. They're adding this. We're just adding housing now, but not necessarily apartments for rentals. There's no rentals.
We're Ben's little brother now.
Well,
we used to be right there.
They've passed us in
size
for sure.
Yep.
Well, they're also addressing their housing needs.
They
are.
And
I don't know if we're doing that. I mean, we're getting some things, but I don't think we're doing that as well as we probably could. We're almost out of time. So, Dave, do you do appraisals? Do people actually hire you individually to do an appraisal before they sell a house? Do you ever do private appraisals?
Yeah, we do that quite often, actually. We'll do sometimes for estates, when there's somebody's passed away for tax purposes. We do sometimes for divorce cases, which isn't a lot of fun. But yeah, we'll do them for pricing of a property. And it's not a huge chunk. Probably 10% of our appraisals are private appraisals. Probably 90% come through lenders.
Yeah, but see, that's the only way I could call you up and do an appraisal for us is that way. Because if we couldn't do it on a house, we wouldn't know who it would be.
Yeah, actually, I get a lot of referrals from realtors because if they're having trouble maybe with their seller not bringing the price down, and they maybe haven't come to an agreement on what they think the price is, and so they want another voice from the outside to come in.
Good luck getting a Christmas break or Christmas vacation this year.
You might.
Guy's not going to let you have 2 weeks off when appraisals
not if
are
I can
2
help
weeks
it,
out.
for sure.
You might be pretty busy for sure. And Guy, how can someone get a hold of you? Because the interest rate's still, well, you can't. By the way, you haven't had any close? Have you had any closings yet with the new TRID system? We're out of time though.
We're just about to start doing those.
You're going to start closing.
Yeah.
Remember, it was a 6-week closing period. We'll see how that goes. Well, anyway, you can find Guy Giles. You can Google him right there at Ditech Mortgage, and he'll be there to help you out. That'll do it for the Real Estate Show here for November the 7th. For Pete and Joe, thanks for joining us, everyone. Have a great week, and God bless, and we'll see you next Saturday right here on KMED. 2 weeks from today, back here on KMED.
You've been listening to The Real Estate Show on KMED AM and FM radio, presented by John L. Scott Real Estate of Southern Oregon, along with All Cities Property Management, the Home Builders Association of Jackson County, Ditech Mortgage, the Jackson Soil and Water Conservation District, and the Rogue Valley Association of Realtors. For guest information or to watch a past show, visit us online at realestateshowOregon.com. Join us again next next weekend for Southern Oregon's one and only real estate show on KMED.